The Decentralized Autonomous Organization, or DAO, was a digital form of venture capital. It was an ambitious idea to provide a new decentralized business model for organizing corporations on top of the Ethereum blockchain. Few people in the crypto community were opposed to this premise, but the timeline was short, the code requirements were tremendous, and in retrospect, a vulnerability was inevitable. The DAO launched in May 2016, setting the record for the largest crowdfunding event in history. The following month, the DAO was hacked, and millions of dollars of Ether were stolen. The reverberations of the event were a referendum on how the Ethereum community governs itself. Matt Leising is a reporter for Bloomberg who has chronicled the DAO in his article, The Ether Thief. Matt continues to follow cryptocurrencies closely as the Internet of Money fractals increasingly into the public consciousness. It was a pleasure talking to him, as it always is talking to the folks at Bloomberg. They always give a great and accessible understanding of technical topics. If you like this episode, we've done many other shows about cryptocurrencies, Ethereum, Bitcoin, other cryptocurrencies like Ripple. You can check out our back catalog by downloading the Software Engineering Daily app. Today we only have it for iOS, but we're working on an improved back-end recommendation system. We're working on an Android app. We're working on a web front end. If you're interested in contributing to the Software Engineering Daily ecosystem, you can go to github.com/softwareengineeringdaily. We are focused on making an app ecosystem that works well for users of Software Engineering Daily, because it's hard to find episodes that you want to listen to, because we've got 600 episodes. There's just a lot of topics. And you can upvote episodes. You can get recommendations based on your listening history. We hope it helps you, and I'd love to get your feedback on this project. Jeff at softwareengineeringdaily.com. Thanks for listening. To build the kinds of things developers want to build today, they need better tools, super tools, like a database that'll grow as your business grows and is easy to manage. That's why Amazon Web Services built Amazon Aurora, a relational database engine that's compatible with MySQL or PostgreSQL, and provides up to 5 times the performance of standard MySQL on the same hardware. Amazon Aurora from AWS can scale up to millions of transactions per minute, automatically grow your storage up to 64 terabytes if need be, and replicate 6 copies of your data to 3 different availability zones. Amazon Aurora tolerates failures and even automatically fixes them and continually backs up your data to Amazon S3. And Amazon RDS fully manages it all, so you don't have to. If you're already using Amazon RDS for MySQL, you can migrate to Amazon Aurora with just a few clicks. So what you're getting here is up to 5 times better performance than MySQL, with the security, availability, and reliability of a commercial database, all at 1/10 of the cost. No upfront charges, no commitments, and you only pay for what you use. Check out aurora.aws and start imagining what you can build with Amazon Aurora from AWS. That's aurora.aws, aurora.aws. Matt Leising is a reporter at Bloomberg. Matt, welcome to Software Engineering Daily.
Thanks for having me.
Today we're going to talk about a variety of subjects in the cryptocurrency community. I originally messaged you to talk about the DAO hack, and I certainly want to get into that because your coverage of it was really good, and there's just a really good piece on the DAO hack on Bloomberg. I'll put it in the show notes. People can certainly read through it, or many people probably have already read it. How did you get into reporting on cryptocurrencies?
So it's a bit of a twisted tale. I've covered market structure for Bloomberg News for more than 10 years. When I say that to people, they're like, what is that? And in its essence, it's kind of like how markets work or don't work. So I started by covering derivatives exchanges before the financial crisis, where futures are traded at like the CME Group or NYMEX in New York, where oil prices are created. that led to the financial crisis when the swaps market blew up. I started covering swaps and all the reforms that came through the Dodd-Frank Act because I had a background in clearinghouses, and that's the way that the Congress kind of wanted the swaps market to be reformed. Then I started taking on sort of responsibility in the fixed income market, which is how bonds trade, corporate bonds, or the U.S. Treasuries, how they trade. So, obviously really big, huge, important markets. And throughout this process, I had always heard about Bitcoin and I kind of dismissed it. I didn't think something that had no underlying value could actually stick around, and it was just sort of all speculative. But then sometime in 2015, early 2015, I finally understood what blockchain was. And it totally opened my eyes because I realized instantly that everything I'd been covering for years was potentially going to be disrupted and changed radically. And so I just sort of went to my editor and said, I need to start covering this as my beat. Nobody at Bloomberg really knew much about it at that point, certainly not blockchain. They might have known about Bitcoin. So in that regard, I was a little early to it. And, we just started covering it. And then it turned out that I had sources from my other world, like Blythe Masters, who was at JP Morgan. I sort of knew her. She became the CEO of Digital Asset Holdings. I've known Dave Rudder for a very long time, since he was at ICAP, and he was now heading up R3. So it just made a lot of sense. It just all kind of clicked, and I started reporting on it. That was like the early days of when Wall Street was really going crazy over the potential here for what blockchain could do. It wasn't even sometimes like at proof of concept stage, but the hype had definitely started by mid-2015 when we did a cover story for Markets Magazine on Blythe Masters and digital asset.
Today it's getting real with cryptocurrencies, and it's no longer just implications. This stuff is solidifying into reality, and given the volume of intelligence behind these efforts, it seems almost like a foregone conclusion that there is going to be some serious disruption. And I'm sure whatever degree of shock you felt when it first clicked in 2015, I'm sure that's only amplified in the last 2 years.
Oh yeah. It's hard to kind of quantify it, and it feels like 10 years. It doesn't feel like 2. What I like to tell people is the way I think about it, in a way that sort of helps keep things straight, is you've got the public blockchain stuff that's happening, which is Bitcoin and the Ethereum network. And then you've got the private stuff that's happening with enterprise solutions, so like Hyperledger or the Enterprise Ethereum Alliance, where companies like JP Morgan and IBM are designing, enterprise blockchains for private use for, the financial industry or healthcare or supply chain management. So on the public side, that stuff is out of the bag. The genie is out of the bottle, and that nothing's going to stop that. It's like Bitcoin is unstoppable. It's one of the fascinating things about it. Ethereum, I believe, is unstoppable. It's just at an earlier stage. And those the digital apps that people are going to create on top of the Ethereum blockchain, that work is going on right now, and it's a lot of fascinating, really interesting stuff is being done. There's not much in the production stage yet, but I think that that's going to change in the next 12 months or so. That's going forward. Nobody's going to stop that work. On the private side, it's still an open question to me whether Wall Street can get its act together and trust each other enough, or have privacy safeguards in place so that you can have a private blockchain for, syndicated loans or, the repo market, things that haven't been updated for decades. So my beat, that I'm following finance really closely, and I find that stuff fascinating, and it's still a bit up in the air, in my opinion, about whether we're going to see production level products coming from that side. Then on the other side, the Ethereum stuff and the Bitcoin stuff, that is our reality, and I think it's going to be the new internet in a few years. And if it goes the way that folks want it to go, we won't even notice. That's what they don't really want you to notice, that the back end changes. They just want it to be seamless. So I think we're at a fascinating stage of development, and it's kind of like an epoch, if you want to put it that way.
Do you think is it going to replace things, or is it going to just be augmentative? So for example, people invest in 401ks, and the value proposition of a 401k is that this investment is going to make sense in 20 or 30 or 40 years. And if you look at that sort of investment thesis, particularly given what 401k funds typically are investing in, I think like traditional stocks and bonds and financial instruments, making a 30 or 40 year time horizon bet on that financial system, to me it seems completely preposterous. But but there you just said that if it goes the way that people want it to, we're not really going to notice it. So do you think this is a replacement system, or is it an additive system?
I think it's both. I think it definitely depends on what you're talking about. Your question reminded me of how my profession, journalism, or just writing in general, has changed. The format has changed, right? Like you don't get a newspaper delivered to your driveway anymore, but the need for information has never been greater. So you're just accessing it in a different format. The financial world, that same thing I think applies. You're still going to need investments. The market still needs to be there. The regulators still need to be there to keep everybody from getting scammed and all of that. It's just Joe Lubin, who's at Consensus, he talks about what Ethereum, the promise of it is that it puts a price on intermediators. So you have a company like Uber or Airbnb who come between an apartment owner or a car owner and a renter or a passenger. And they provide a great service, but they do take a cut out of that. And the idea of the Ethereum blockchain is a smart contract basically takes it's now a piece of code that does everything that Uber does or that Airbnb does, but the fees are minimal, if they're at all, orders of magnitude smaller than the percentage cut that either one of those companies is taking right now out of every transaction that they arrange. And then the brilliant thing, in my opinion, is that you see all these initial coin offerings that are going out, and that's what's going to fuel the use here. So let's just call it a car coin for an Uber sort of competitor. You have to go out and buy car coin to access that car digital app on the Ethereum blockchain. Now, all the developers and all the coders who wrote that program are going to own a ton of car coin, and they're going to hope to see it go up in value, and that's how they're going to get paid. So it's really amazing to shift the economics of a system that in that way. So I think that's what people get really evangelical about.
Yeah, so originally I wanted to talk to you about this DAO hack, and I do want to talk to you some about that, but given that this space is moving so fast and your eye is so fixated on it, I feel like I would be doing a disservice to the listeners if I focused entirely on this news that has kind of come and gone, and there's lessons to take away from it, and I do want to talk about some of those lessons, and we'll go into the DAO hack a little bit, but just to get things started with a contemporary lens, we were just talking before the show about Bitcoin Cash, and there's a lot going on that I don't really understand. Could you maybe give us an overview? I'm actually doing a show that's going to be entirely dedicated to this subject, the segregated witness, the Bitcoin fork, and kind of the different factions that are involved. But I suspect that even one entire show dedicated to it won't cover all the politics. It won't cover all of the technical issues that are going on.
Or maybe the animosity.
Or the animosity.
You would need several shows to contain that.
Yes, but since you are a professional at reporting and condensing information, why don't you give us an overview that we can then springboard into more of a discussion about what is going on, what motivates Bitcoin Cash to exist, and perhaps why Coinbase isn't supporting it, which is another area of controversy.
Yeah, sure. And I'm a little out over my skis here, but I can give you my layman's interpretation. And
that makes two of us.
Yeah, what I'm mostly doing is basing this on my much more extensive knowledge of what happened with the Ethereum fork. So basically, a blockchain in its essence is a time-ordered succession of transactions that have been verified by a distributed network. So everything is ordered, and if I sold you a Bitcoin 2 years ago, it's back in the blockchain, it's been verified, it's there. And so if you now want to go sell that Bitcoin, one of the things the network will do is check that, that transaction is still valid and that you own that Bitcoin from 2 years ago. Now, the network is really important, and that's basically all the hard drives around the world that are running the software that make up the backbone of, say, Bitcoin, and that's the blockchain. When this size limit debate came up in Bitcoin, it's been several years they've been arguing about it and proposing solutions. And what it came down to is you have to put a new version of the Bitcoin software out that all the hard drives are running, and the vast majority of computers need to upgrade to that version, and that's known as a fork. So now what happens is at a certain block and a certain time, the network starts running this new version of the Bitcoin software. And so if you are trying to imagine it visually, I think of a tree limb that's growing, and then at the end of that tree limb, it's stunted, and a branch starts growing out from the end of that limb, and that's the fork. That's the new chain that the Bitcoin network is going to work off of, and all the transactions are going to go to that one and be verified, and it's going to grow and grow and grow. Now, if you think of that end of that tree limb, there's more room there for another branch to grow. And in the case of Bitcoin Cash, I think if it's like Ethereum, which I believe is the case, miners can continue, they can choose not to upgrade, and they can continue to use the old software so that transactions that they process will add to the old network, and that limb at the end will keep growing sort of straight, and you've got the fork and then you've got the straight. So the fork here is now just known as Bitcoin, but the one that keeps going straight is known as Bitcoin Cash. That's what happened in Ethereum when the fork was done, and that's why we have now Ethereum and Ethereum Classic. Where it gets really kind of meta and weird is that I believe you now have dual transactions on each chain. So if you had, say, 10 Bitcoin before the fork, and you now, I believe after the fork, you have 10 Bitcoin Cash. So that now is a digital currency, and it has a value. So, it's kind of like you're through the looking glass here, and a lot of people who had Ethereum, found themselves suddenly with Ethereum Classic. And
sorry, with just Ethereum Classic, or with Ethereum Classic and Ethereum? With
Ethereum Classic and Ethereum.
Right, so you get a clone, basically. Yes. You get to play in both worlds.
Right, and I think before Ethereum forked last year, this had never happened, and people were like, one of the other fascinating things here is that a lot of this stuff is happening in real time in front of everybody. And so it's just sort of like, okay, this is, wow, let's figure this out in front of the whole world. And so when we get into the DAO story, I can tell you a little bit about, why that was sort of a monumental factor in what happened with the theft and everything. But so basically it's just a split in the network, and unless 100% of all the users go with the new software, the old software is going to continue to operate, and that's going to have a kind of like a mirror chain that is out there and viable.
You have a software project that you want to build. Everybody does. I love building products, but I know more about how software fits together than how to actually write the code itself. I don't spend a lot of time writing code, but I do like to build software. That's why I use TopTal. TopTal is the best place to find reasonably priced, extremely talented software engineers to build your projects from scratch. You can get a pair of Apple AirPods when you use toptal.com/sedaily to work with an engineer for at least 20 hours. And I recommend it. I think it's a great way to build your projects if you don't have time to build them yourself. There's a misconception that engineers have to build all of their own projects just because they're capable of doing that. It's not true. TopTal has only the top 3% of developers. They turn away 97% of the developers that apply to work on the TopTal platform, and that's how you get a matching process that's unlike anything else I have seen in the freelancer marketplace. And I've tried a lot of different freelancing platforms. TopTal has such high-quality engineers, and they listen through the design specifications that you have. They handpick the perfect developer for your project, and this has saved me countless hours in my development process. There's really nothing that compares to TopTal that I have seen. So you can get a free pair of Apple AirPods when you try TopTal at toptal.com/sedaily. Find an engineer that's going to help you build your side project and get your MVP off the ground. As long as you do at least 20 hours, you get those free Apple AirPods. And if you've already got a company that you're working on, you can also use TopTal to scale your team and get everything done faster and raise the bar for your engineering, or get through that blocker that's preventing your company from getting to the next level. So check out toptal.com/SEDaily and find an engineer who will help your project succeed. And the Bitcoin Cash fork is, if I'm correct, it's the version of Bitcoin that the preponderance of miners prefer. And because there was this debate between essentially the miners and the exchanges. The miners wanted a system that was more benefiting of the hardware that they had already purchased, because their hardware could mine more effectively, or they had more of a competitive advantage in that world. And the exchanges wanted something where Lightning networks or side chains allowed for faster transactions, higher transaction throughput, but more quote-unquote centralization, where you have, you don't necessarily need all the miners in the world to verify a given transaction. You might just have this centralized trust network verify certain buckets of transactions. Am I painting the right picture?
I think you are. That sounds accurate, but this is now I'm really I'm out of my depth, but I think you're on the right track, because I've seen Bitcoin Cash already referred to as the first China coin.
Okay.
Meaning so you might not know, but I think it's somewhere around 60% of the mining that's done in the Bitcoin network is done in China. Mm-hmm. And there's a huge infrastructure there with the hard drives and Bitcoin mines, and they a lot of times have access to subsidized electricity. And so that would make sense that Bitcoin Cash, would, if miners are favoring it, that would kind of get that sort of nickname already.
Mm-hmm. Right. Okay, well, let's scroll back in time a little bit and talk about the DAO and the lessons learned from the DAO. So just to give a little bit of an intro, I'll tee you up with kind of the story of the DAO. It was this crowdfunded, one of the earlier ICOs, basically. I think you would call it that. Yeah, is this basically this fund where people could have decentralized autonomous organizations. It would enable decentralized autonomous organizations, and it would be this big, system of smart contracts, or smart contract in and of itself, that would enable people to set up these organizations under it. And they did an ICO, essentially, to raise some money for it. And they ended up raising a whole lot more money than they anticipated. And the code that was written for the DAO, the Decentralized Autonomous Organization, was open source, and people were looking at it. And in the run-up to the actual launch of the DAO, where people could start, transacting with it, there was this professor who was looking at the code, and he's like, there's something wrong with this. I'm a little concerned about it. There's some bugs. These might be exploitable. But I guess the alarm wasn't sounded loudly enough, and the DAO launched, and then there was the hacking. And we can get into the hacking, but correct me on anything I'm wrong with in teeing us up for a discussion of this.
No, you got that exactly right. It was definitely an ICO. The SEC kind of weighed in on this last week and said that they did view it as a securities offering, and it was definitely an initial coin offering, but they were declining to bring any charges because nobody associated with the DAO registered it as a security or went through any of those formal processes. But they raised 10 times as much money as they thought. Christoph Jentz, who was one of the co-founders of Slockit, who they were the creators of the DAO, he told me he thought they'd maybe raise 5 to 10 million, and they ended up raising 150 million over 28 days last year. He said it was the most stressful period of his life, and the most stressful of this whole time was when the money kept rolling in, because it put this huge target on him, and the pressure was, can you imagine? I mean, and he said, he thought if it was $5 million and it got hacked, the spread out value of that probably would have been not very much for how many people bought tokens. So it wouldn't have been a big deal. But when it got to 150 million, that was, he said, it became too big to fail.
The people who are pouring money into these things, do you know like who they are? Because I suspect that this stuff is still a little too difficult to transact with for it to be grandma.
I mean, no, not grandma. But think about this: like you're ahead of the curve here, and you get in on the Ether pre-sale or the sale of Ether. That was also an ICO. It was, not sure if I have the dates, but it was like maybe a year or two or a year and a half before this or so. But I believe it went out to people in the know for 5 cents.
Yeah,
and I know people who bought. Imagine buying $1,000 worth of it at 5 cents.
Oh my god!
And then it goes up to $20, right before the hack. So you're sitting on this huge pile of paper money, basically,
so much money.
Paper value. And there's nothing to spend it on.
So people just got insanely rich. This is what I find so interesting. People got insanely rich on Bitcoin, and then more people got insanely rich off of Ether, and probably some people just like totally parlayed Bitcoin into Ether and just made massive amounts of money.
Yeah, we're talking billionaires, like seriously, legit. I know people, just normal guys, they're like, wow. I've got $700,000 worth of digital currency in my account, and this one guy told me that he just bought at the pre-sale and hasn't touched it since. So, that's the Ether story, kind of, because it went from zero to, it topped out at $400, but now it's more around $200. But still, that's an incredible, it's like a 3,000 or 4,000% increase. And so, so there's nothing else to do with Ether yet. And the DAO comes along, and it sounds like a great idea because you're going to allow the potential users of these digital apps to vote on, ones that they think should be funded because they think they're promising. And that was the whole idea that Gents had, because like a lot of companies, he needed to raise money for Slockit, which their idea is it's a smart lock, S-lock, it reminds me of S-Corp, from Evil Dead 2, right? So a smart lock is something that is controlled by the Internet of Things, and it's on the Ethereum blockchain. So if you want to rent a bike, you come across one of these, you can interact with the smart contract, and you send it some Ether, and it unlocks the bike for you, and you pedal away. So that was their idea, but they needed funding. And as he was going, through the idea of like, okay, we'll do, we'll sell a coin, we'll do, the crowd raise like we do, like everybody else is doing. He just said, well, why should everybody have to do this? It's not very efficient. He's a good coder. He's like, everybody wants to make things more efficient in their code. And he thought, let's just open it up for everybody, and we'll have this giant pool of money. And people will vote through a smart contract process on, submissions or applications that they think are good, and then they would get funded. So that was the idea. The code was pretty simple, but it was untested as well, and there were several security flaws that were brought to light before it went live.
Indeed, and let's take the listeners to that moment before it went live, where. Well, I think so. Your story opens, and people should really read this story because it's really compelling. There's a Cornell professor of computer science. He's sick in bed, and he's concerned with the DAO. And was this? I can't remember if it opened like right before the DAO launched, or was it right after the DAO launched?
So the DAO had launched, and the story opens 5 days before the hack. So it's a Monday night. And this Cornell professor, Eamon Gun Sire, everyone calls him Gun, he's in bed with a cold, but he's trading emails with one of his grad students, and they're looking at the code, and they just kind of do this for fun. They go through code and look for bugs, and they kind of just, that's what they do. And he's looking at it, and he's like, I think, he's like, this looks like a bug here on I think it's a recursive call payment. I think that's the technical term. It's basically how you, I think it's how you act, like how you get your money out of the DAO. And he notices that there's just some problems with the order that the code is written. And this is something you just cannot make up. It's on line 666 of the DAO code. And he's like, here's the bug. And he sends it to his grad student. He's like, I think there's a problem in line, basically between line 666 and line 667. And his grad student, Phil Dan, who's, really sharp guy, he's been looking at it and he doesn't think it's a problem. And so it's kind of late and, Gun is sick and he's like, okay, well, let's look at it. Like, all right, let's just move on. Nobody's paying me to do this. And, he told me later, they often find things that they think are huge and they turn out to be nothing.
Right.
So you never know, right? You just don't know. So they kind of go to sleep. And then, basically 4 days later, overnight, that Thursday, people start waking up in the Western world to the fact that the DAO is being drained, that a hacker has gotten in and has figured out a way. So at this point, because of the rise in the price of Ether, the DAO now holds about $250 million. So there's $250 million sitting in this smart contract. And it's got a huge backdoor flaw in line 666 of the code. And somebody has been planning this for weeks, and they execute their attack, and it just starts siphoning off handfuls of Ether at a time. So the next scene is Christoph Jentz, who wrote the code for Slockit. He's lying on the floor of his home office, taking deep breaths, trying not to panic because his baby is being attacked and it's in front of the entire world. And there's basically nothing you can do, because one of the functions of a smart contract is that once it's launched and it's live, you can't change the code. It's immutable. Code is law, is what you'll hear. And that the whole idea here is that you take out the middleman and you try to make it as autonomous and perfect as you can before it goes live. And here, this one went live and the bug is there, and so everybody is just freaking out and they don't know what to do.
Indeed. So what did they do?
So this is where it gets pretty interesting. Of course, this whole community is pretty tight-knit, and there's a lot of brilliant coders and hackers and folks who know their way around a line of code. And a group of them realized right away that the whole pot of money is basically at risk. And because they can't change the code, what they can do is try to replicate the hack and basically steal the money and keep it safe for the community before the bad guy can steal it and make off with it. So this group that came to be known, they started calling themselves the Robin Hood group, aptly enough. They start getting on Skype and messaging around with each other. Some of them are in Germany, some of them are in London, one of them is in Rio de Janeiro, and they all have different expertise in this different area. One of them, Griff Green, is kind of like the mayor of Ethereumville, what I call him in the story, because he just knows everybody. He's a very social guy. You can't help but love Griff once you've met him for like 5 seconds. He's a hugger. He's just a really sweet, good-natured guy. And so he starts interacting with everybody who's online and doing and interacting with the DAO. And so he's out there trying to find out who's who, like, so that he can try to pinpoint maybe, okay, we know who these 5 people are. There's only 6 people interacting with the DAO. Maybe the attacker is this 6th person. So he's on that. There's other people who are better at coding, and they're figuring out, okay, here's the back door. Here's how we think the hacker has done his attack, and here's how we can start getting some code together and a smart contract together to kind of race the attacker and try to drain the DAO for good. And then there's somebody else, there's Alex Van de Sand, known as Avsa on Reddit and Twitter. He's down in Rio, and he's like, all right, somebody has to be the public face of this group so that when we start attacking, they don't think it's another bad guy, but it's us, it's the good guys. So he's like, I can do that. I can be the public face of this. And so they all sort of start assembling together, kind of like Charlie's Angels or like Ocean 11 or something. And, like the Skype messages are flying and the DAO is still being drained. And it's just, like it's a crazy, 12, 16 hours.
And I think it's worth pointing out here that this is a really strong referendum on the positivity of the Ethereum community. And I think this happened again with the ICO, a couple weeks ago, where 77 million was drained in a noble benefactor style. So basically, like, the response to a hack is like, okay, let's get all the white hat hackers together and drain the money in a way that is putting it in a safe harbor until we can redistribute it safely to the people where it came from. And that is, like, just take a step back and think about, okay, these people could just steal this $77 million. There's not even anything really technically illegal about it. I mean, maybe they could get prosecuted or something, but just the fact that their instinct is, we are protecting this system and we want this system to thrive. I think it's a really strong referendum on the strength of the community.
Yeah, I totally agree with you. I think, and it's a bit of a cliche that you hear it over and over again, is that people believe in Ethereum more than in Bitcoin because they say there's more developers in Ethereum. There's more of a sense of community. It's a more collaborative. I'm not in those communities. I couldn't say yes or no to that, but I do hear that a lot. And I think for this example, at least, that is pretty solid proof that there are people who have the overall community, the welfare of it is important to them, and they weren't getting paid to do this. Nobody, this was not a concerted effort by any group, or, a lot of people try to blame the Ethereum Foundation or link it to them, and, that's just not true. Some of these guys have done work for the Ethereum Foundation, but this was just them coming together on their own to try to help right this wrong, and it was quite amazing. And they were scrambling, they didn't know what was going to happen. And so to kind of in the TikTok here, at some point, I think around, in the mid-morning that day, it's now Friday, in New York, the attack stops and nobody quite knows why. And so he's gotten away with, the attacker roughly has about $55 million worth of Ether in his account. And so the group is sort of they figured out the code, and they are pretty sure they know what to do to replicate the attack, but it stops. And they're sort of now the questions start to swirl among the group. It's holy shit, is this legal? Are we going to get in trouble? This guy, I mean, what's different from what we're going to do from what this person is doing? And, they don't really know. And Absa said to me, he's like, who pushes the button? Somebody's got to push the button. And it was sort of he kind of realized that, all right, I can push the button because he cares about the community. He's the guy who helped design the Ethereum wallet, function for the Ethereum Foundation. And that's basically how you interact with the entire network. And so they had qualms, but they also, I think at this point, what they would say is they didn't want to do it on their own, but they were ready now. And if the attacker came back, they were ready. So the funniest part about this is that another sort of you can't make this up. Absa's down in Rio in his apartment, and he's in the Copacabana neighborhood, and they're all sort of they've made the smart contract, and they basically have to walk some of the other guys in the group have to walk him through how to do it, because it's not his specialty. So he's there in his apartment on his laptop, and they've made the decision that there's all this money's at risk, and they're going to try to get in there and because what you have to do is you have to be ready to replicate the attack. You don't have to launch the attack, but you have to be ready to do it. And so to take that initial step, they were all set to go on that Friday evening. Absa's literally he's about to push the button, and his router goes out. And he's just you've got to be kidding me. Basically his internet just goes down. He's got nothing. Yeah. And he calls his internet company down in Rio, and he's on the phone with the robot voice being we're sorry, we detect that the internet is out in your neighborhood. Please be patient. We are working to restore it as soon as possible. And he's you must be kidding me. I'm trying to steal this money back from this robot, and I'm on the phone with another robot telling me, to be patient. And he's just it's just too much, So the other twist here, and there are just so many twists in this story, is that you only have so much time to get in to launch your sort of initial attack. And basically because his internet goes down, they miss the window. So now it's they're done. They can't do anything. And they all kind of feel really defeated. Absa said to me, I felt like I was going to we were going to come in and rescue, save the day. And then basically we're the worst hackers in history.
Oh, sorry. So they could not drain. They did not have time to drain the DAO.
Yeah. So the internet went out on him initially, and it's like the clock is ticking on the smart contract, because there's only a certain amount of time when you can get into this escape pod, is what we call it in the story, to like, and they missed it. So if you're not, so
so this is why they had to resort to a fork, or one of the reasons, I guess.
Not quite. There's more twists and turns. So
okay,
they missed their initial attempt to do it. They couldn't get together the next day. They had family commitments, and everybody was sort of scattered around the world. But then that's the next Sunday they get together, and they're ready to go, and they launch. Like, so to help your listeners, like the DAO, think of it as a spaceship, and the way these guys thought about it is like, okay, the spaceship is like the alien spaceship, in Alien, and it's got the self-destruct sequence, and if you want to get your money out, you have to get into an escape pod, and you have to like ask it to get your money out, and to take, it's a smart contract, and it takes your money and it puts it in something called the child DAO. So it's a sub account. It's out of the DAO, and it's in a child DAO. And this was the back door that the hacker used, was in this functionality. So to replicate the hacker, the White Hats, the Robinhood group, had to be in one of those child DAOs. You have to ask it to initiate a child DAO. I think it's like 7 days. It takes 7 days for you to do it. So, and then it's like the clock starts ticking, and if you're not ready and in it when it closes, then you're still in the DAO. You're not outside in a child DAO account. So they had to wait for another like opportunity to get into one of the ongoing child DAOs, and they eventually did. So now they're ready to go. They're sort of in place, but again, the qualms set in, and they don't want to break the law. They don't want to do it if it doesn't have to be done. So they're just kind of sitting there, and then a few days later,
because the hacker had stopped draining money. So they were like, okay, maybe he gave up.
Right. Maybe he gave up. Maybe he's making a point. Maybe the contract broke, because what it's doing is it's telling the DAO, take my money out and give it to me. And the bug that he exploited was that it allowed him to do that over and over and over again. So even if you only had, say, $100 worth of Ether in the DAO, you could withdraw that $100 over and over until you had 1,000 or 10,000 Ether, and so that's how he was able to get all the money out. But apparently that intensity on the smart contract can break it at a certain point. So they weren't sure if that's what happened or if he stopped on purpose. But in any case, a couple days later, once the White Hat guys are ready to go, the bad guy comes back and he starts draining the DAO. So now they're ready to go, and they basically all get together and they launch the counterattack, and they start draining. So the best way to think about it is, at this point, at the beginning, there was about 12 million Ether inside the DAO, and that's how you get the value of it. And the value of Ether, of course, fluctuates. The attacker had drained about 30% of that 12 million. So he had, 7.2 or yeah. So he's got that. There's 70% remaining, and that's basically the race is between the White Hats and the Black Hat to get that 70%. And so they kind of go from there, and they enlist the help of the community. Griff goes out, and AFSA, they go out to like people they know who have a ton of Ether in the DAO, and they ask them like, hey man, I need all of your Ether if you don't mind, to help drain the DAO. And amazingly, people were like, yeah, here you go. And so because they had now they had, I don't know, let's just make up a number, 10 times as much Ether at their disposal versus the Black Hat guy, they could drain the DAO much more efficiently and quickly. So basically they won the race, and at the end of the day, the White Hats had the 70% secure, and the Black Hat had the 30% secure. Mm-hmm. So now this is all maybe within a week of the attack, right? So this is all very frenetic, very frantic. So they're doing this, sort of behind the scenes. At this point, definitely behind the scenes. I think they did make some overtures, on Twitter and on some other, Slack channels and things, to let people know that they were good guys, they weren't stealing, that they were doing this to protect it. But it was definitely, I think, behind the scenes because they were worried about the legal consequences. Then on the other side, you have the whole rest of the community being like, oh my God, what are we going to do? Everybody starts talking about how to fix this through the blockchain. And that's where we come to this sort of debate about a soft fork and a hard fork. And folks like Vitalik Buterin, who invented Ethereum, are very involved. There's a huge debate that begins. People in the Bitcoin world start chiming in because, to a lot of them, you can't change the software. The blockchain is immutable. That's the whole point. And so this whole debate starts getting going, and it's rather fascinating. And that's what's going to get us to the hard fork decision.
This episode of Software Engineering Daily is sponsored by Datadog. We know that monitoring can be a challenge. With so many services, apps, and containers to track, it's harder than ever to understand application performance and to troubleshoot issues. Built by engineers for engineers, Datadog is a platform that's specifically designed to provide full-stack observability for modern applications. Datadog helps dev and ops teams easily see across all their servers, containers, apps, and services to monitor performance and make data-driven decisions. To get a free t-shirt and start your free trial of Datadog today, visit softwareengineeringdaily.com/Datadog to get started. Datadog integrates seamlessly to gather metrics and events from more than 200 technologies, including AWS, Chef, Docker, and Redis. With built-in dashboards, algorithmic alerts, and end-to-end request tracing, Datadog helps teams monitor every layer of their stack in one place. But don't take our word for it. Start a free trial today, and Datadog will send you a free t-shirt. Visit softwareengineeringdaily.com/Datadog to get started. Okay, and so real quick, the difference between a hard fork and a soft fork is that if you make a hard fork, you're saying that this new version of the blockchain is not compatible with old software versions of the blockchain. So everybody, you're either on the bus or you're off the bus. Soft fork, you're making a fork that is back compatible. So I guess with a hard fork, you're invalidating some percentage of the original blockchain.
Not quite exactly.
Okay.
I think about it this way. The soft fork idea was that they were going to blacklist the Ethereum that had been stolen. And they were going to try to, the idea was like, okay, we'll come up with a system that will not allow that Ethereum to be sold or moved. Anytime it does, we'll be alerted and we'll do it that way. And not to get into the details, but that people realized that was too difficult to maintain, and it just sort of kind of came and went as an idea. So the next idea was, the hard fork. And rather than at this point, because the blockchain is growing, of course, there's still people using the Ethereum blockchain, so transactions are being added. You can't invalidate all of those transactions. That would be impossible and a really bad precedent. So the hard fork, basically what it was they were going to redesign the code of the DAO to simply do one thing. If you had money, if you had invested in the DAO, you were now going to be able to get your money out. So they would launch that smart contract on a block that is, a certain number of blocks down the chain from where the original DAO was. It would link back to the DAO, and any interactions with the DAO would now work on this new contract that is just basically, come get your money out. And to do that, they had to convince the entire network running Ethereum to upgrade to that version of the software that had this one change in it. So I was confused by this too, and you can't go back and change the history of the blockchain or invalidate all those transactions that have happened in the meantime, because we're talking about a month between when the hack occurred in June and when the hard fork was implemented in July of 2016. Right. So that's a lot of transactions. And if you went back and just wiped that out, everybody'd be like, screw you, I'm out of here. This is for amateurs, right? So that's the nuts and bolts of it. It was really kind of contentious, and people, there's a lot of heated debate, as you've seen in the Bitcoin block size limit debate. People take this really seriously and they get emotional. And, a lot of people have their lives invested into it. And it was just, a lot of back and forth. But at the end of the day, the community, they put out the update. And the vast majority of nodes running the Ethereum blockchain upgraded to that version. It was something more than 99%. And everybody celebrated, they opened some champagne. People were like, all right, this is great. We've done it. And it basically invalidated everything that the attacker had done because of another quirk in the way the DAO was designed. And so the way I thought about it in the story was, on the one hand, Christoph Gentz, he wrote a big bug unknowingly into the code that allowed the attack to happen. But on the other hand, the way he wrote the DAO allowed it to be saved, because when you initiated a child DAO, when you basically, for whatever reason, you said, I want out, you had to ask to do that, and then it took 7 days. And then the money that you had would be moved to the child DAO, and you had to wait for 30 days, or maybe it was 27 days or 28 days, to get that money out. So there was this long waiting period, more than 4 weeks. So basically, the attacker, he robbed the DAO, but it was like he had to kind of sit there at the curb by the bank, with his bags of cash waiting for his getaway car to show up, 4 weeks later. And so by doing the hard fork in between that time, but when he could have made off with his money, they basically stole it back. And now the attacker had nothing to show for his effort. And that was, I think that was a big reason that the community wanted to go along with this, was because it really just sort of like they hacked the hacker. Mm-hmm. So,
did you say
the next twist? Are you ready for the next twist?
Okay, sure. Let's go to the next twist.
So the next twist is, so as we said earlier in the show, what's a hard fork? Okay, well, it's meant to put the chain in a certain direction with a change to the underlying code, right, through an update. But that doesn't stop people from not choosing the update and still working off of the original version of the software. So, and this is now we're back in July of 2016, and I think Bitcoin had done a few things like this, but nothing as major and nothing as publicized. So, for the first time, the guys like Absa and Eamon and Goon and Christoph Gentz, they're all watching this, and they see the hard fork, and it's adopted by more than 99% of the nodes running on Ethereum. But there's this little sliver that didn't, and they're like, wow, why isn't it 100%? We don't understand. So they're just kind of scratching their heads. Then they start to notice that the miners are working off the old chain. And by the old chain, I mean that's the original chain. That's Ethereum. The fork is that becomes Ethereum Classic, the old chain that still has the DAO attack in it.
Yes.
So the history of that chain has the DAO attack, and so people are just like, wow, okay, this is now kind of wild, and we're into like the fourth dimension here. And people start building on that chain, and pretty soon, there's a lot of reasons why people say that they want to support it. Some of them are, people from the Bitcoin community who don't ideologically believe in forks. So they're just like, this is the true history of the blockchain. We're going to support it. And other people, I think, see an opportunity to get in at the very early stage of Ethereum Classic, which of course basically starts at $0, but soon has a value and it goes up to $1 or $2, So they've watched Bitcoin rise in price. They've watched Ethereum rise in price. And I think there's just some people who want to jump in. So what's happened is now you've got Ethereum Classic. And as I said, on that chain, the DAO attack still lives. Mm-hmm. So the attacker now has 30% of his attack. It's just not in Ether anymore. It's in Ethereum Classic. Mm-hmm. And the white hats have that 70%, not in Ether, but in Ethereum Classic. So basically, to kind of make a long story short, through all of this, the white hats sort of they didn't really pay attention, or they chose not to really kind of continue to go after the attacker on the Ethereum Classic chain. And this is what they refer to as the DAO wars, because what it is you have to constantly be watching for the attacker to be trying to get out in his child DAO and then move the money, and you have to follow him and attack him and try to stop him from doing it, so that he has to do it again and again and again, and it just would go on in perpetuity. And I think because the folks who were in the white hat group had saved all of the actual Ether, in the original attack, or they had saved 70%, and then the hard fork had returned it to 100%. They were like, that's good enough.
So let's be clear. the value that the hacker ended up getting was the money from Ethereum Classic that was created just like, I mean, I'm sure he couldn't have seen that coming. He or she couldn't have seen that coming. And that's where the vast majority of his value came from, is the fork.
Yes, it's the entire value of his theft. That's where, yeah. So that's, one of the final and craziest twists is that the solution to restoring the ether led to the thief, having some of his money, or, having a value again in Ethereum Classic.
So I think it's worth taking a step back here and saying this is pretty good proof in the whole thesis of like fiat currency is just what you make of it. Like, you can invent a currency today and say this piece of cardboard is worth $18, and if people believe you, then it's worth $18. And money is an illusion, and we can invent money, and as long as we come to a consensus around the fact that this is worth, or enough people come to a consensus that this is worth some amount of money, that we can convert this into dollars, which, by the way, started in this kind of in the same way, that's a currency.
Yeah. Besides all the technical kind of fascinating aspects to it and the social aspects, there's a real philosophical aspect to all of this as well. The theory of money and yeah, it's just a mind bender. You can just kind of go deeper and deeper and deeper into this story, or just into the implications of this story. And it's definitely not something that's just sort of an artifact that happened last year. We're seeing it with the Bitcoin fork now. And I mean, I don't think anybody, like, if you had asked, do you think Satoshi Nakamoto thought that there would be a Bitcoin Cash? I mean, I kind of doubt it.
Yeah. Well, okay, so let's now go there, because let's talk about how this, so the DAO hack led to this Ethereum Classic and normal Ethereum, and there were people who were poo-pooing that. And, I should point out, so I was doing shows about Bitcoin and blockchain and Ethereum a year and a half ago when Ethereum launched. Or I guess that was about 2 years ago, almost 2 years at this point. And there were Bitcoin maximalists even back then, and they were telling me that Ethereum is just going to end in disaster. This thing is too ambitious. They're totally crazy. They don't know what they're doing. I got to admit, I was actually a little bit swayed by them. Like, I ended up doing a show called Ethereum Skepticism, where I was basically like, okay, what's all the reasons to be skeptical of Ethereum? And, but since then, the Ethereum community has turned out to be so strong and so intelligent. Now I'm a lot more open-minded about this stuff. And why don't you frame the ideology that's being represented so strongly and angrily, and all the animosity that's going on today? Frame that in terms of the Ethereum fork.
Yeah, sure. I think that was a lot of people's experience back in that time frame. Whether Ethereum could survive this debate was definitely an open question. I think that was something that you had to sort of take seriously. What I find interesting about it is that frame of the argument is allowing the Bitcoin community to define the Ethereum community, and I don't think, I certainly don't think the Ethereum community thinks that that's how it should work. And I don't think I've spoken to, or I've emailed with Vitalik, and he's told me that the sort of immutable type of blockchain that's Bitcoin has been built around he's not interested in it. He's interested in making something that works, and if and when the network needs to be tweaked or changed, they're open to it. And it's kind of not a big deal to I think the core guys in Ethereum, the way that it is a big deal to the people who are in the core camp on the Bitcoin blockchain. So it's just a sort of ideological difference, and I think one persuasive thing that's been said to me by more than one person is, look, in the business world, do you really want to get involved in something that can't be changed? Mistakes are made, like transactions go bad. And if you can't go back and audit and change the history of your business, that's kind of like, I don't think that sounds great. So something that does have more flexibility while coming from the sort of hardcore crypto world sounds like a betrayal. I think in the more mainstream world, it sounds like kind of like something you'd want and a feature, not a bug.
Mm-hmm. Okay. Bitcoin Cash versus regular Bitcoin. This is something that is like happening right now as we speak. And Coinbase put out something. Coinbase is the biggest exchange of cryptocurrencies, biggest, safest, and tons of people have Bitcoin sitting on Coinbase. And Coinbase said, we're not going to support Bitcoin Cash. So we've already addressed this idea that if you're with Ethereum and Ethereum Classic, what happened was, okay, this fork occurred and you got money in both of these places. So the money in Ethereum Classic, like we said, was quite material. And this was money that allowed the hacker to actually benefit from hacking the DAO. And Coinbase basically said, look, we don't care that you have X million dollars in Bitcoin. Well, they didn't say we don't care, but they said we're not going to support it. So whereas, if this fork occurred, this fork did occur between Bitcoin and Bitcoin Cash, everybody should, if we're taking the lessons of the Ethereum fork to be the standard, you should get a copy of your currency in both of the forks. So why wouldn't? Gosh, I have trouble like wrapping my mind around this, but why wouldn't Coinbase support that? Why wouldn't Coinbase give you as much Bitcoin Cash as you get in Bitcoin?
That is a good question, and I don't feel like I'd want to answer for Coinbase. I think
I'm interviewing somebody. I'm interviewing somebody from Coinbase, I think tomorrow, so I will get the answer to that question.
So thank God for Twitter, because I forget things that I see on Twitter, and then because there's so much, and then it comes back up, and it just bubbled up into my mind. What you have to do to list a new asset on an exchange like Coinbase or Gemini, that you have to go to every state where you are regulated, because they're regulated as money transfer agents. And you have to apply to them to say, okay, I have a new asset. It's called Bitcoin Cash, and I want to list it on my exchange. So I believe it's not. Maybe Coinbase didn't do the messaging as well as they could have, but it's not something like they just flip a switch and now all of a sudden you have Bitcoin Cash.
Oh.
So that might be part of the answer here, and so yeah. And another fun thing I'm gonna front run myself a little bit, but a story I'm working on is, when you deal with Coinbase, your transactions don't touch the blockchain. You're dealing with Coinbase as they have an internal ledger. They have a bunch of Bitcoin in an internal account, and a bunch of cash in an internal account, and a bunch of Ether and a bunch of Litecoin. And when you go there and you say, all right, I want to buy 100 Bitcoin, they're like, okay, where's your cash? Okay, there it is in your account. And now I'm going to take the cash from your account, and I'm going to take the Bitcoin from my account, and I'm going to swap them.
They're a side chain.
They're not even a side chain. They are like, I don't think, because that implies that there's some link to the actual blockchain, but there isn't.
Oh.
So now it's just in their internal controls. And
right.
If you want to have the 100 Bitcoin that you just bought from Coinbase on the blockchain, you need to move it out of Coinbase onto your wallet.
Wow.
That does have an address. And not many people know that. And I think as this becomes more popular and the price goes up and people get it's more attention, we feel like, at Bloomberg, that like it's part of our job to educate folks that, this is how this stuff works. Like everybody kind of, if you want to know how the New York Stock Exchange works, you can find, I don't know how many books on it, but at this point, how Coinbase works is sort of like, well, it's their security. I don't mean to say anything about, they're all, by all accounts, they have very good security, but it's a developing kind of situation and a developing interaction.
Right. So when you're buying something on Coinbase, you're not actually buying the cryptocurrency asset. You're essentially buying an asset that is pegged to the value of Bitcoin, but it's not actually Bitcoin.
I'm not sure I'd say it that way. It is Bitcoin. It's just not in your possession. One of the roles the exchanges play is also of custodian. So you now have bought your Bitcoin, but Coinbase, unless you take it out of Coinbase and put it in your wallet, they're acting as a custodian for it. So they actually own the Bitcoin that you purchased. So if that's something you don't like to do, you need to take it out and put it in your wallet, and then it's under your own personal control. A lot of people feel just for convenience sake, they leave it with Coinbase, or maybe they don't know that this is how it works. I don't really know. But I tell you, I was reporting on this for 2 years, and I just learned that a couple weeks ago, and it surprised me.
Okay, so Matt, you've been really generous with your time, and I want to go a little bit further, but I'll be respectful of your time, and we'll wrap up soon. But I wanted to just ask you just a little bit about what it's like reporting these days, and what it's like being at Bloomberg, because it feels like the news cycle has just changed. I don't know, something happened with the presidential election where I guess it made everybody's hair stand up on end. It made Twitter a whole lot better. Just in terms of the quality and the velocity of information that's coming on. And I've interviewed your colleagues Brad Stone and Lizette Chapman about varying topics, and I just always love talking to reporters because they're so good at putting a verbal flourish to the technical topics that I cover in technical detail. But maybe you could just tell me what it's like being a reporter in 2017 and your perspective on the news, and perhaps what it's like to work at Bloomberg.
Yeah. Well, first of all, thank you, Jeff, for this. It's been really, really fun, and I really appreciate your interest in the story and just the space in general. So this hour has flown by. Yeah, you're absolutely right. It's the pace of every week I just laugh because somebody's like, God, that was a crazy week in crypto, right? And it's yeah, every week it's a crazy week. We're only on Wednesday here, and we've already got the fork and Bitcoin Cash, and God knows what's going to happen next. So it is really hard to keep up with it. We've recently expanded the number of reporters we have who cover this, just because we're getting more and more interest from Bloomberg subscribers on the terminal for any info on what's going on with these digital assets and the underlying blockchain sort of revolution, or whatever you want to call it. It's it drives web traffic like crazy. It's Twitter loves this stuff. It's the fuel that sort of makes it all go. And so the challenge is in the ICO craze, how do we possibly know what's a good ICO and what's a bad ICO? We're not necessarily trained to read through white papers and figure out that this is sounds good or doesn't. So we've taken a much more general 30,000 foot view on ICOs, where it's just this is going crazy. They're raising more money than venture capitalists, and sort of not tried to, because whether we like it or not, when you write about something, it puts a sort of imprimatur on it, and it kind of legitimizes certain things. So, we want to be careful with the Bloomberg reputation to do our due diligence and just do solid reporting that we're known for. But when things move this fast, it becomes, it's a real challenge. And I think, it's a rarity kind of in this world where you knew that okay, August 1st was coming and there's going to be the vote, for Bitcoin. And it's so we could prepare for it. The Bitcoin Cash stuff, that's what you kind of sort of have to be more ready to go on the fly and just sort of roll with it, because nobody was talking about that a couple months ago. It just sort of, suddenly popped up a week or two ago, I think. And so it's fascinating, and it's kind of I think it helps for an organization like Bloomberg to have folks like my colleagues Lily Katz or Camilla Russo, who are day to day, they're blasting out really great spot news stories on what's going on, prices, the volatility. And then I'm more of okay, what's the big picture stuff? How do we do a smart story on, what's going on and what needs more deeper reporting? So we can kind of hit it from both sides. But you really, to stay up on this, you need to be on Reddit. You need to be watching Coinbase or CoinDesk. You need to be watching Forbes. There's just a lot of great outlets for many different aspects. There's Laura Shin has a great podcast on this, Unchained. So I think it's a fire hose right now, and any reporter or news organization, I think, would feel stupid trying to own it. And we just all have to do what we do best, and hopefully it's up to the readers and listeners out there to just sort of put together a menu so that they can get as holistic a picture as they can.
This is something when I talked to Brad, one of the things I asked him, and this is obviously coming from my biased perspective because I run Software Engineering Daily with with one other person. Erica helps me out a ton, but it's not a news organization. It's not Bloomberg. It's not the New York Times. And when I was talking to Brad Stone about it, I was like, it's kind of nice doing what I do because I get to own my own destiny. I don't have to answer to anybody. I kind of make my own deadlines. I get to, I get the uncapped upside of my own business and my own reporting. Yeah. And you don't get that.
You for sometimes.
Well, but this is what I said to Brad, and I was like, so why? You're Brad Stone. Why don't you just open a Patreon account and become the Brad Stone channel, and you could make a really good living just as Brad Stone, or just write books all the time. Why not? Why are you spending your time getting your upside capped by working for a large organization that takes the upside beyond your salary and whatever stock they give you? And now I'm starting to understand, because you can do things at a large news organization that you simply cannot do. And like you said, there's the imprimatur. Your words are going to not just have the impact of Matt Leising. It's Matt Leising times Bloomberg with all of the reputation that comes with Bloomberg. It's just an interesting, place where we are at today with news and talk about centralization, right? I would argue you don't want a news ecosystem where everybody is just individual reporters and you have to go out and figure out which of these reporters do I trust. It helps to have centralized outlets that have internal vetting processes. And that's why, when I look at that kind of centralization, I think the same kind of centralization is needed on the blockchain, which is why I'm a fan of the sidechain Lightning Network story. But that's certainly a different episode. So
yeah.
Anyway, well, Matt, it's been great talking to you. I appreciate you coming on the show.
Yeah, Jeff, thank you so much. This has been really, really fun.
If you want to start a podcast, check out Podsheets.
Podsheets is a product we built to create and manage podcasts. We are podcasters ourselves, and we understand the difficulties of getting started.
You have thought about starting a podcast, but there are so many questions.
Is it expensive to get audio equipment?
No, it's not. You can get a decent mic for $20, or you can get started with just an iPhone headset.
Is it hard to get a good quality audio recording?
It's actually easy. We will show you how to record your audio and get good fidelity.
Okay. How do you edit an episode?
We will teach you how to edit an episode, or to help you find an editor who will edit your episode for $5 or $10 per episode.
And then how do I post my episodes? How do other people get access to them?
Podsheets makes it easy to post your episodes and distribute them to iTunes and Google Play with a single click.
If you're curious about podcasting but have no idea where to start, Podsheets will guide you through the process.
Podsheets is built by podcasters for podcasters. With Software Engineering Daily, we've been producing 5 shows a week for 2 years. We understand recording, we understand how to produce your show, and we understand how to get advertisers. We want to help you with this process.
Check out Podsheets today. We will give you everything you need to create and manage your podcast. And if you have any questions or get confused, you can always contact us directly for help. Podcasting is as easy as blogging. Let us show you how to podcast with Podsheets.
Wow!